In today's unpredictable landscape, uncertainty really is going to reign supreme. Now, yes, with all of the uncertainty that's out there, we're finding investors are really starting to get on edge about the Federal Reserve meeting. And the reason why is because we are actually uncertain about if we are going to be receiving one rate cut of 25 basis points or two. And that uncertainty actually is going to be what the stock market is going to react to coming up, and whether we will actually start seeing volatility start to go down and stock prices go up, or if volatility is starting to actually take off and we're going to start to see stocks go down. And that's what we want to be talking about today. I want to kick off with economic and stock market risks. Our primary mission here at Lions Wealth is to preserve and protect your hard-earned wealth. Now, yes, there's been a lot that has happened, and one of those things is really gold has come out of this sideways pattern and is starting to gain value again. Now, what this tells me is that inflation is actually starting to bottom, and our data is starting to show that we may actually start seeing an uptick of inflation in the coming weeks. So this is not great news with what Jay Powell is trying to do with the Federal Reserve, and he wants to cut interest rates. And right now we are really pricing in 2 rate cuts of 25 basis points each. Now, if that happens and Jay Powell gives us 2 basis points, yes, we can have some enthusiasm and the stock market can go up, but ultimately what that's going to signify is that our economy is not doing nearly as well as what we anticipate. And so we could actually start to have a sell-off starting to happen. But on the other hand, if we only get 1 rate cut of 25 basis points, you could actually start seeing the bond market sell off because the expectations for 2 are what you call baked in. And so if we only get 1, maybe the bonds are the ones that sell off. So the Federal Reserve now is in this rock and a hard place of what to do, whether it's to show that the economy is actually in a worse spot than we may realize, or that we're in a better spot than we may realize, in which case the bond market may be the one for a sell-off. So all of this is that uncertainty that we're talking about. But another piece of information has already cropped up with the Wall Street Journal, and they may actually have gotten a leaked report of the data that's coming, because what they're starting to say is that there is a lot that is happening, and there's a lot that we may not want to do with a 50 basis point cut or 2 cuts, and we may only want to do 1. So the expectation right now is that we probably will get 1 rate cut. That may signify that their stock market may continue to go up while the bond market actually may go down in the short term, but long term it may actually flip where the bond market starts going up and the stock market starts going down. So there's a lot to do. And that leads us to portfolio changes. In times like these, where there's a lot that's going on, actually having a disciplined approach is pretty crucial. And the one element that we look towards, whether it's the bond market, the stock market, is to the strategy. And what we look for here are different positions that are going up in value. So we call this momentum, whether they're going up in value or actually down in value. We can actually cut losses on the ones that are going down in value, and we can actually put that money to work in ones that are going up in value. And right now, gold is actually one of those places that is starting to really pick up the pace in growing. And what this is actually showing us is that we're having a transition from lead 4 to lead 3, which is a stagnant economy, but we have rising inflation. And what we see that works in this environment, other than gold, are some of the things we already have in the portfolio. Consumer staples work well. Utilities, real estate, healthcare, these are all sectors that can work well because they have pricing power when inflation continues to keep rising. So there is a resilience there, but right now we have to wait and see for what the Federal Reserve does as well, to see if that's going to be the correct place to be. But in the coming months, I definitely say it would be, with respect to not only gold, but some of those safe havens. As we're looking towards the overall wealth plan, let's talk about your wealth plan. And let's start with wealth management and advanced planning. Michael Canovitz's new book, 4-Minute Retirement Plan, is actually something that introduces a revolutionary concept. Now, it's the concept of goal chunking. And yes, we have heard that a lot with respect to time management, and especially for executives as they're working on things. But this is also something we can use for retirement. And why this is so interesting is he really brought up the idea that we can take a look at the overall wealth plan, and we can start to put things in place just by looking at where we need to chunk individual priorities. And when we focus on those meaningful priorities and goals that you want, especially for the future, we can actually look to put in place the different different aspects of that. So whether it's your estate plan, whether it's part of the business and making sure that we have the retirement plans correctly. Well, if we avoid the distractions, if we look at all the different various plans that are out there, we can now start to take control over your overall wealth plan more. And by chunking it down into time blocks and different goal areas, we can really start to look at the different retirement outcomes that you want. And that can actually provide less stress or even avoiding the burnout. And that is the big piece that the goal chunking for retirement can do for you. Moving on, let's talk about our second opinion service. As we're talking about all these different aspects of whether we're talking about goal chunking and how we can be working with the overall wealth plan, or even the uncertainty of the markets, you probably know someone that wants a second opinion on their overall wealth plan. Someone that's close to you, whether it's a family or a friend or even a business partner. But if they are looking to reassess their plan just to see if it's on track, we offer that second opinion service in which we'll go through a discovery meeting and then we'll talk about the findings. And that is going to actually come back to figuring out if there's any gaps that exist in their plan. Now, with that, they can take that information, go back and fill those gaps, and to use those chunks of goal planning that we were talking about to actually help improve their overall wealth plan. Now, that's something that you have the ability to offer them, and if they want to go through a second opinion review of their overall plan, feel free to reach out and click the link below, and we'll be happy to set up a consultation to go through any of their information. Or if you are actually looking to go through a second opinion, we'd be happy to do that as well. So with that, be on the lookout for everything happening with the Federal Reserve and know that there are still great opportunities ahead. Take care.